Hi there traders and investors, today is Tuesday, March 14. I'm ready to present to you a fresh market review prepared for InstaForex. The highlight of the day is the US CPI report. It's due to at 8:30 a.m. Eastern Time, an hour earlier because of shifting to daylight saving time. Don't miss this news of major importance. Now let's discuss my trading ideas on the MetaTrader chart. As usual, we're starting with gold. The metal has made stunning price moves in the last couple of days. Something similar has already happened earlier. Gold used to gain sharp bullish momentum and traders rushed to go long. This is what has just happened. The gold spike was propelled by two factors: the evidence of rising unemployment in the US and the crisis unfolding in the banking sector. Besides, the market is alert to the important event later today, the inflation data. The Federal Reserve adjusts its interest rate decision to the inflation data. The regulator might decide whether to raise interest rates or not, to raise them sharply or moderately, to raise them frequently or seldom. In other words, the US Fed considers a number of options. If the CPI is high, gold will enter a correction stage. Alternatively, if the CPI goes down, which might also happen, this will correlate to rising unemployment. This will be bullish for the US dollar. From my side, I suggest two trading plans. If the CPI increases, gold will make a downward correction, so we will be able to enter the market at a retracement and add long positions, betting on the price growth to the 2000 and higher. If the CPI is red, we will use a huge bullish candlestick that will trigger our stop losses. I admit I'm not always far-sighted, but earlier I recommended you plan long positions at the 61% Fibonacci level because I found reversal patterns in the zone. The euro-dollar pair is not at a new swing high ahead of the news. The instrument could make a significant downward correction. The price has tested the swing low today. Those to trade at price swings might have earned almost 400 pips. I can offer the same trading plan. If the CPI is red, the instrument will skyrocket in response. If the CPI is green, the price will drop and will take money from the seller's stop losses activated. Then we will be able to go long. By and large, the same scenario is valid for all trading instruments with the US dollar involved. The pound-dollar pair is trading in the same way. I retain the same targets. I discovered a large trading volume and a strong bullish impulse. The buyer's stop losses were activated. If the US CPI is in the green, the currency pair will make a retracement. We will go long, aiming to hit a target at a high at 1.2450. Conversely, if the CPI is in the red, we are following the same steps as described above. Let's speak about the dollar-yen pair. The yen strengthened notably. I still keep the downward trading plan. There is a swing low with nice downward targets. I also suggest two alternative trading plans. If the US CPI is in the green, the US dollar will strengthening. Then we will see a retracement in the dollar-yen pair and consider selling options. If the CPI is in the red, the instrument will slump immediately. That's all I wanted to tell you today. See you soon with the regular market review. Goodbye.